Hello traders, you are welcome to this video on the trend following forex strategy, and we are going to be specifically talking about the 2050 EMA wave. Okay, so this strategy is built around two simple tools, which are the 20 period exponential moving average and the 50 period exponential moving average. So together they help traders identify the direction of the trend and find potential entry points. Now let us break it down step by step. Okay, what are exponential moving averages to start with? An exponential moving average or EMA is a technical indicator that tracks the average price of a currency pair over a set number of periods. All right, that set number of periods is what we have here as the length. Okay, so we're going to be having the 20 EMA, and okay, let's just increase the thickness. Okay, so unlike the simple moving average, the EMA, that is the exponential moving average, gives more weight to recent price data, making it react faster to market changes. The 20 EMA is considered short term, while the 50 EMA is medium term. All right, so I'm going to change this. I have to change the color, obviously. I'm going to change this to 50. Okay, so we have the short term EMA and the medium term EMA. Okay, all right. So to add these EMAs, you can see how I did it. Just click on indicators here, or you just search for it. It's pretty straightforward. Okay, that's if you're using the trading view platform. Just search for that EMA and then you change the settings. Just follow the way I did it and add it to the chart. Once you add the first one, add the second one. Make sure that you use different colors for easy identification. All right, okay. Now when the 20 EMA is above the 50 EMA, it usually signals that the market is in an uptrend. All right, but when the 20 EMA is below the 50 EMA, it signals a downtrend. Now the gap between them shows the strength of the trend. All right, a wider gap between the 20 EMA and the 50 EMA means a stronger trend, while a smaller gap, if you see a smaller gap, it could mean that the trend is weakening. Like you can see what happened here. You can see how this trend is a weak trend because of the small gap. Okay, but you can see in this case, when we had a wider gap, you can see that the trend was more consistent. All right, so this strategy is based on crossovers and alignment. All right, when the 20 EMA crosses above the 50 EMA, it suggests the start of an uptrend, right? The start of an upward move. And when the 20 EMA crosses below the 50 EMA, it suggests the start of a downward move. Okay, but it doesn't stop there. Traders often wait for price to pull back to the EMAs before making a decision. All right, for example, now after we had this upward bullish signal, the price had to pull back to the EMAs before you look for buy opportunity. Here again, it has to pull back to the EMA before you look for buy opportunity. Preferably it has to pull back to the longer period moving average, in this case the 50 EMA. So it has to pull back to the 50 EMA before you look for a buy opportunity. The reverse is the case for a sell. If you get a sell signal with a bearish crossover, just wait for the price to pull back to the 50 EMA, before you sell, before you look for a sell opportunity. All right. Ensure that the price is being rejected. Wait for a confirmation candlestick pattern before you jump into the trade. Okay. Now, you will notice that in an uptrend, when price comes back to touch or approach the 20 or the 50 EMA, it can act as a dynamic support zone. In as much as sometimes price will pierce through the EMA, but at the end of the day, you'll see it's acting as a dynamic support zone. All right. And then in a downtrend, the EMA will be acting as a dynamic resistance zone. Right. The reason this strategy is called riding the wave, is because the 20 EMA often hugs the price closely, showing the short-term direction, while the 50 EMA provides a smoother, slower confirmation of the original or the overall trend, right? So by following both, traders aim to stay with the wave of the market instead of going against it. Now, when using this strategy, it's important to stay disciplined, all right? Not every crossover leads to a big move. And that is the reason why many traders also look at higher time frames for confirmation. Okay. So for example, if the 20, the 20 50 EMA, or the 20 and the 50 EMA, if they're aligned on the 15-minute chart, you can go to a higher time frame actually, to make sure that the overall direction matches. All right. This helps to filter out false signals. So, for example, if you go to perhaps, if you are doing your initial analysis on the 15-minute chart, you can go to perhaps a 1 hour chart or 4 hour chart to see the prevailing trend over there and ensure that the trend on the 15 minutes matches the trend on the higher time frame that you want to trade. Okay. So whatever time frame that you are executing your trades, or just make sure that the trend there aligns with the trend on the higher time frame. Okay, so now we can see that the market currently is in a consolidation phase, right? Because you can see that we are having kind of a wedge pattern forming here now, right? So we are currently in a consolidation phase. So in this phase, it's advisable to stay out of the market. You can see here, even on the 15 minutes, the moving averages are going sideways. All right. But let's say during this time when we had a bullish trend, let's go to the 1 hour to see whether the trend was also bullish. All right. So you can see the trend was also bullish. So this was a good time to look for buy opportunities. So you understand the point now, right? Whenever you want to execute a trade on the smaller time frame, ensure that the trend matches that on a higher time frame. So if you are new to this, try using this strategy on the demo account first. Practice spotting the crossovers, identifying pullbacks, and observing how price reacts around the EMAs. With enough practice, you'll start to see how useful this trend following approach can be. And that is a complete breakdown of the trend following Forex strategy. Ride the 2050 EMA wave. Okay, we've covered what EMAs are, how to set them up, how to interpret the alignment, and how to use crossovers and pullbacks to stay with the trend. If you enjoyed this tutorial and found it helpful, don't forget to click the like button and subscribe so you won't miss future videos on Forex strategies and trading guides. See you in the next video.